Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. What's up, everybody? It's Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an amazing trading day yesterday, as we are about to do what we do each and every day, looking at the same futures markets, identifying potential reversals and breakouts heading into a Friday. In today's edition, we are going to talk a lot about how big news can blow through levels, and we are looking at that as we speak, as quite literally about 15 minutes before recording today. The Chinese government announced $75 billion in new tariffs against U.S. goods. So we're going to talk about what that is and how the markets are reacting. Very quickly, if you're new to the channel, click the subscribe button, hit the notification bell. If you are not new to the channel and you're a regular subscriber, hit the like button. Hit that little thumbs up button over there. It doesn't take you more than a second. That way we can move along. All right, let's go. S&P down 13 this morning. We had a little bit of a 15-minute level yesterday that just completely blew right through. And that level yesterday on the 15-minute chart blew right through. And we already knew that our probabilities were a bit lower because we were in a sideways market. So we were kind of reaching a little bit with that 15-minute level. But then it came down to the level below where we got a decent little bounce. And in any of these, we put our stop below the pivot. So we got a really nice bounce off of that level, for those of you that are able to catch that one. And then today on the tariff announcement, we saw the same movement. Now notice, this would be an expanded range candle, a speed candle, which oftentimes those get retraced. Price came back to the origin of that retracement and then moved away again. And so now I'm going to take a look and remove these lines since we've traded into it twice. And we're going to wrap our lines around the origin of the most recent speed candle. Based on these Chinese tariffs. Now, this is a news-driven speed candle, but we typically do anticipate many of these to get retraced. Now, also going on today, we have the Fed Chairman Powell is talking at the Jackson Hole Symposium. So understand that there's always a bit more risk involved when those kind of things are occurring. So from a big picture perspective, when I'm looking at this, you know, I definitely see that we've got this area that we keep hitting our head on. And yesterday we talked about the breakout potential of this area. And my thoughts on the breakout was that this breakout is no longer valid. It got sloppy, especially on the hourly chart. The breakout got too sloppy with too much bumping its head up against the area without truly hitting it. And so now we were waiting on a breakout to the upside and then trading the retracement. So certainly, that's why we were waiting on that, because we got yet another potential head fake yesterday morning, but we're not biting, right? We weren't biting on it. We were waiting for a breakout and then a retracement. And so now I think that we are still in between this sideways price action, but we've got a level of demand and a level of supply that we can lean on, I think both. In the Nasdaq, same thing. That 15-minute level just absolutely blew right through. We came back down to this pivot low and got a little reversal off of there. And so our next low is down here at this little area in there, which was done at a market close. And we had a really nice, decent candlestick move away. I don't love the basing that was after that level, but I still think it's all right. As we come back into here, we could see a bit of a reversal, much like we did in the S&P. I'm going to wrap some lines around the origin of this latest news, in case we do get that retracement to the top of this zone. Crude oil. Crude oil, stop me if you've heard this before, but we're still waiting for high-quality levels of demand and supply in order to take a trade in crude. And when we were looking at this yesterday, we were looking at a new level that possibly formed. Some of you, I got a couple of messages that some of you took this wick over wick level and caught that for a few points down. So those of you that took that level, good job seeing that and catching that as that opened up and created itself a bit after we finished our live trade room yesterday. But that's really the key, is being able to spot those levels on your own. And so a couple of you that caught that, nice work. So now we've got truly have a decent supply level after today's big move down. Now this is the This is the strong move down on the retaliatory tariffs that China had put in on the most recent news. And so if we see crude oil going down like this, and if we see the S&P and the Nasdaq falling hard like this, then what are we going to see with gold? Rising. No big surprise on this. Now, yesterday when we were looking at gold, we looked at this little bitty level in here on a 15-minute time period while we were in class. And we got a little touch and go move away, and then the second time around we said it's got to be some sort of a confirmation entry if you want to give it a go, and it just didn't hold, right? And it didn't hold on a news announcement. So anytime you have strong news like that, news will trump those kind of levels. And so now we've got this big move higher in gold, but it's not as big as, say, crude oil's move down. So while I do have that big move higher, you could theoretically wrap your lines around here. I'm not as comfortable with this level as I am with the S&P level and the crude oil level, but I think that there is still a lot of validity to it because it is a speed candle and price moved its way up. Next, looking at our bond markets. So sliding over to bonds and currencies, we had a level inside of the bonds that we were looking at yesterday. Once again, another little pop above, chopped around, and now we're rallying up pretty hard to that area as we speak. Inside those bonds, you got to put your stop above the pivot, so you may or may not have gotten stopped out based on your risk tolerance. The next price is rallying up hard on the bonds as we're seeing. Again, the yields as being kind of back in the news, but I don't think there's anything really in here that I want to lean on beyond that. Still too much in between levels of demand and supply for me to lean on any of those. Inside of the Aussie, we do have a bit of a potential, we talked about an Aussie breakdown. We didn't really get great basing here, and then we didn't really get great basing in front of this breakdown, and so you may or may not have taken this breakdown level. If you didn't take the breakdown level, I actually really like the next opportunity for the reversal level somewhere up in this region. Based on this most recent movement, I think that you may get a shot at it right up in here. 670, 67, 61, 67, 66. So it's a very, very small zone. We're getting a little bit of a bounce off of our euro level. So those of you that took the euro level, we're getting a bit of a bounce. The problem with the euro level is the basing that we had in front of it. So if you took this euro level, I think you would want to move your stop to break even at this point, only because of that opposing zone being so close, and those two candles with those high upper wicks telling me that there's a lot of sell pressure coming in. So take your stop, move it to break even. And so on this one, I'm now going to remove this level. Now, the reason I'm removing it and not just turning it into a confirmation entry is because on my 4-hour, if we break below here, my big picture trend is already down. It's really going to be down from that point forward. In the Canadian dollar, we are sitting above our potential breakdown level. I want to see some basing in front of here before I'm interested in it. Theoretically, if we do get a bounce, you've got this little area up here that you could lean on. It's not a great time of day that it was formed, but it could be a level where we could see some movement coming out of there. And last, but certainly not least, the Great British Pound, Japanese Yen levels. Both of those areas are looking for a potential reversal to demand in here. And then the Japanese Yen, we were talking yesterday about a potential breakdown, and we got everything we needed for a basing below the level, and then on our news announcement, we just popped right straight back up. And this is the setup of what news can do to trades. So there's no way of knowing when some of these big news announcements are going to come out. This was not a scheduled news announcement. This was not something that we knew was coming. And so the only way to really react in that market is to have stop losses in place to protect yourself in a lot of these positions. And then we'll trade the overreaction and the retracement. Now, there's a chance on the S&P that we continue to fall throughout the course of the day. And so be very cautious of this demand area. Same thing with this one here in the Nasdaq. I would be very cautious of both. But we're not completely falling off the radar, although the Nasdaq is performing worse, down 0.75%, almost a full percent, whereas the S&P is only down 0.5%. Nasdaq is performing a bit worse this morning than the S&P, so just make sure that as you head over the weekend that you are protecting yourself if you do indeed hold a futures contract over the weekend. That's all I have for today. If you guys have any questions, please send us an email, support@tradersarmy.com. I will talk